I say it all the time. Be wrong, make money. And this is what you have to decide. Do you want to make money or do you want to be smart? And it seems so obvious, right? Oh, I want to make money. But do you really want to make money? Is that really your motivation? Or is your motivation because you want to make these great calls and you want to be right and you know? And I'm just telling you, people won't believe it until it happens to them. You're going to get killed doing that. You're going to lose money doing that. So you have to make a choice at some point. If you could do it early on, it's great, but chances are you won't. I didn't. Almost nobody I did do. I know did.
Welcome to the AlphaMind Podcast, hosted by Stephen Goldstein and Mark Randall. The podcast which is always looking to help traders, whether they're new to the game or whether they are seasoned and experienced traders, explore how they can be better, more productive, more effective traders by looking at the human aspects of trading performance. Today we welcome back an old friend of the AlphaMind Podcast, Jason Shapiro. Jason may be better known to other people as the Contrarian in Jack Schwager's Last Market Wizards books, Unknown Market Wizards. Now that hopefully should tell you all you need to know about Jason. A brilliant trader. He's been a guest on the podcast twice. He's an old friend of AlphaMind's. We love having him on. We always get some incredible feedback from people when he has been on. Before we get into the podcast, long-term listeners to the AlphaMind Podcast will be aware that we have a very highly valued partnership with the Society of Technical Analysts, who are a globally renowned education institution that has been at the forefront of helping traders, analysts and system developers hone their technical analysis skills for over half a century. Thanks to this collaboration, we are thrilled to extend an exclusive benefit to our listeners who can obtain a £100 discount or its equivalent in your local currency on their superb Technical Analyst Home Study course. This comprehensive course has an option for an internationally recognised diploma and has been created by some of the leading experts in the fields of technical analysis. The course is designed to profoundly enhance your skills and knowledge and delves into a wide array of price action techniques, methods and aspects. The knowledge can prove invaluable to traders, investors, analysts, quants and system developers, offering fresh perspectives for deciphering and interpreting price action, sentiment, liquidity and many of the aspects around those, including the underlying human behaviour which goes into these aspects. You can visit our website at alpha-mind.net and scroll down to the Society of Technical Analysts section to find a link with more detail how to take advantage of this offer. Now on with the podcast.
Well, welcome to this week's AlphaMind Podcast, and we're delighted to have Jason Shapiro back on the show, I guess to some extent by popular demand, because the last times we had him on, it just blew our numbers out significantly. Jason appeared in the Unknown Market Wizards book, but has got a back history of futures and all sorts of things. And yeah, I don't want to tell his story. Jason, give us a bit of background about yourself, where you are now, and of course, what you're doing, and we'll just move the conversation on from there.
The short story is I've been trading basically my whole adult life. I started when I was about 21 or 22. I'm 56 now. I manage a CTA. I have a handful of institutional clients who hire me to do, I believe, two things. One clearly is to try and make them some money. And two is my process and my method creates really negatively correlated returns to a lot of return streams. So they put me in there as well to obviously, if I don't make them money, it's worthless, but to make the money and do it in a negatively correlated way so that it adds to their their risk adjusted returns over time, pushes out their efficient frontier, so to speak. And that's what I do.
Yeah, no, I think it's. I remember the last time it was, I think, a real fascination for a lot of people that are listening in. That, I mean, you were known in Schwager's book as the Contrarian. I think and of course that's a grand middle name to have. And of course, both Steve and I, having come from the market, we kind of get that the edge that one can have of thinking differently, and to some extent using the emotional flaw in others to go against them in a way by looking at the data that's there and out there and to be collated by anyone really, by having this intelligent sort of attitude of curiosity of looking at the market in a way that comes across perhaps a conclusion that, as we are discovering, is contrary to what the market immediately thinks, because you're looking and thinking very differently to the crowd. Now, I know that you use things like the CFTC Commitment of Traders report, or at least you did. I guess you're still using that. But of course, if you were someone that was coming at this, clean, and somebody that kind of wanted to get into this, where do you start? I know that you've got your own newsletter and the Credit Market Report, but if someone was going to apply their curiosity in the same way that you did to exploring the opportunities in markets, where do you start, and how do you work out what the edge is from what you do?
So, there's a lot of ways to say it, but I think the easiest way to say it is what I found after my first, let's call it, decade of trading. It's and having my own losses and having my own bad thought processes and seeing what the result of that was. It just became sort of clear to me that it's a lot easier to find what a bad trade looks like, whether you're doing it or whether somebody else is doing it, right? For me, at least, it's a lot easier to me to find what a bad trade looks like. So rather than sit here and try to be the greatest predictor of the future, which I'm not going to be because nobody's going to be, or try to be the greatest analyzer of the macro situation, which I try to be just because I find it interesting, but I find that I fail to be, right? Because I don't, again, think that there is such a thing. You can get it right sometimes and you're going to get it wrong. You know what I mean? And like, it's just so much easier for me to recognize what a bad trade looks like. So when I can see what a bad trade looks like, well, then why not just take the other side? It's just, to me, it's just that simple, So it comes down to something I harp on a lot. Are you in this game because you want to prove that you're right? Or are you in this game because you want to make money? That is the question you have to ask yourself, okay? And that is the most important thing there is. Listen, I have been super bearish the long end of the curve in bonds for quite a while, okay? And not only for quite a while, but I was still bearish the long end of the curve at the lows. And the thing has ripped, okay? 30-year bonds from the lows, let's just look, are up like, 15 full points. That's a big move, right? So that clearly has not been a very good idea. You know how many bonds I'm short? 0. You know how much money I've lost on that? 0. Okay. Since the lows in bonds, I've made pretty damn good returns because of other trades I've had on. I didn't make them long bonds. I didn't even make those returns long stocks. Okay. It was currency trades that worked for me, and it is what it is. But the point is, was I wrong about bonds rebounding as much as they have? 100%. Good for me. I love being wrong and making money. It's the greatest thing there is, right? I say it all the time. Be wrong, make money. And this is what you have to decide if this is what you want to do. Do you want to make money, or do you want to be smart? And it seems so obvious, right? Oh, I want to make money. But do you really want to make money? Is that really your motivation? Or is your motivation because you want to make these great calls and you want to be right, and and I'm just telling you, people won't believe it until it happens to them. You're going to get killed doing that. You're going to lose money doing that. So you have to make a choice at some point. If you could do it early on, it's great, but chances are you won't. I didn't. Almost nobody I did do. I know did, right? But at some point, you're going to have to come to the conclusion of, okay, I just want to make money, and what's the best risk reward way to do that? And for me, again, I have found that the best way to do that is to find high probability losers and go the other way. That's it. Okay, that's it. And they're not that hard to find. They're not that hard to find.
This is why we love having you on, Jason, because when you made that comment just now, are you in this game because you want to be right, or are you on this game because you want to make money? I just punched the air. I wish we could have had that on video, because that is the whole challenge. that it reminds me of that Ed Sakota comment.
Everybody gets what they want.
Everyone gets
Yes.
everyone gets what they want
And
from the
I've
market.
come to believe, I've read arguably every trading book that you could name. I've been doing this for, over 35 years, right? And for the first 20 years, I went through the same thing that everybody went through. I read Warren Buffett books. I read the technical analysis books. I read the trading psychology books. I read the market wizards books. I read them all. You know what I mean? I probably haven't read a trading book. Well, there's one I can think of that I read that's arguably a trading book. But in 10 years, and all I really read now is psychology books, right? And I spend a lot of my time consciously observing human psychology as I go through life and as I go meet people and as I go through situations. It's a little bit of a sickness that I have. And I do believe that what people get what they want out of it. Yes. And you would think what they want is profit, but a lot of time it's not necessarily the case. People sometimes, for whatever reason, are looking for sympathy. I know people outside of trading as well that it's almost as obvious as it could be. When I hear about how they grew up, they felt very rejected by their parents and by their mother, right? And so the guy just keeps screwing up consistently in his life because he gets to go back to his mommy and get his mommy's sympathy. She's always there for him, right? A mommy's always there for you, right? And I think that's what he wants. I think he wants mommy's attention and mommy's sympathy because he felt like mommy didn't give that to him when he was growing up. So that's what he wants. So that's what he gets. Okay. And I think it's the same thing in the markets. I think I see it all the time. Now that I'm like on Twitter, which I was never on until like the last 10 or 11 months, I see these groups get together and it's like they just, they hug each other. Hey, we're going to be right eventually. Just hang in there. You know what I mean? We're all in this together. Just hang in there. We're going to be right eventually. Like, okay, if that's what you're looking for is friends and all that, then I get it. Then there's plenty of places that you can get that. For me, unfortunately, because this is my career and it's the only way that I make money, I can't afford that. I have to. It sounds stupid, but I have to make money doing this because if I don't, my children are going to go hungry, and I don't want my children to go hungry. So. Yeah, I think it sounds so silly and it sounds so elementary, but you really got to dig deep, man. Are you trying to prove that you're right or are you trying to make money? You got to start right there.
You've nailed the essence of the market. And I know you were in Vegas recently and, I heard some great stuff about your talks and your interview at the Traders for a Cause. And, that's the stuff that, and you know what? I know you just said something. You said it sounds so simple, but it's not really, is it?
No.
It's the hardest thing to do.
Because you're
It's
going
the
to say to
hardest
me,
thing
what is this idiot talking about? Of course I want to make money. That's going to be the answer because you're not really getting into your mind, right? You see tons of people that, they're shorting the market because Donald Trump was elected president, or they're shorting the market because Joe Biden was elected president. They're trying to prove that their belief system, right, is correct. Donald Trump is horrible for this country, therefore the stock markets go down, therefore I'm going to short the stock market. How'd that work out for you? Joe Biden is horrible for this country, therefore I'm going to, the country's in trouble, so I'm going to short the stock market. How's that worked out for you? Like, I think it's just that's just so much more important to people that they want. And I did an interview with Annie Duke, and she talked extensively about this. The need to be right trumps everything. And that is what is so dangerous to get into in this business, because you can make arguments all day that you're right. We see it in politics all the time. It doesn't matter what actually happens. People will find a way to justify it so that they can say, see, I was right about that, right? But the markets don't allow that for you, man. You know what I mean? Because there's a P&L. And so you are not going to be able to keep proving that you're right if, in fact, you're losing money. You can hold on and say, oh, any day now I'm going to get it right. But eventually you're going to lose. It's going to cost you money. So the markets don't afford you to do that kind of thing. So just be ready for that, you know. Embrace being wrong. Somebody on Twitter just said something to me this morning about how I was wrong about some call. I was like, I was, you know what I mean? And thank you for pointing that out, because you just helped me get better. But it's true. I want to be reminded of when I'm wrong all the time. You know, I mean, listen, I write stuff down. I have this weekly report that goes out to our people, Crowded Market Report. But all it is what I've been doing for 25 years, which is like my weekly sort of notes and all that stuff. And I put stuff on there all the time so that I can go back and look how wrong I was, man. Like it's so important. It's so important to acknowledge being wrong. So especially when money's on the line, especially, you know, in this business. So I just think people have to get that before they're going to have any success in this. It's okay. Be wrong. It's fine. Be wrong. Just be wrong small.
You know, it's I was, you know, both me and Mark, we coach lots of traders, and you know, we work on this kind of, you know, process, mindset, you know, getting yourself physically, mentally, you know, in the right state as much as you can. And I was recently talking to a client, a lady who works at a hedge fund, and you know, she's a great trader, but she has this challenge. You know, she came from a very intellectual background. In fact, there's a couple of points here I want to make, but you know, and I told her of a mantra I used to have when I was a trader, sort of back in the dim and distant days when, you know, when I traded, sort of pre 2010, and what was a big moment for me was when I came up with this mantra: is learn to love your losses. That was a big moment for me. It just freed me from the need to be right, because I at times would get convulsed on that need to be right.
Everybody does.
Okay.
We have a huge need to be right.
Yeah.
Okay. We really do.
Yeah.
And it's hard because
it's really hard. But I worked out that, you know, for me, losing, I made this idea that losing was my capital. You know, I needed to make losses. If I wasn't making losses, it means I wasn't putting money on the table. I wasn't taking risk. And if you don't take risks,
listen,
you're not going to find the ones that work out well.
Losing trades, right?
Yeah,
exactly.
Just don't trade.
You won't have any losing trades. I promise you. Trade, I promise you, you're gonna have losing trades. Okay. I have, as I've talked about many times, I have more losers than winners. It doesn't mean you have to. It doesn't mean everybody has to. But that's how it works for me. I end up having more losers than winners over time. Okay. So what, right? You know, you say the person came from a very intellectual background. That tends to be the biggest curse there is in this business, right? I have found, and I have worked with, obviously, you know, when I worked in the hedge fund world in the city for a big hedge fund and all that, you know, the vast majority of the people that were managing money went to Ivy League schools and Ivy League MBA programs and all that, and were clearly smart people. But to me, I always saw that as a curse, because what is the lesson that they learned through their life, right? They learned in high school that if they worked very hard and applied themselves, that they would get into, Harvard. And they learned in Harvard that if they worked very hard and applied themselves, that they would get into whatever, Wharton MBA. And they learned in Wharton MBA that if they worked very hard and applied themselves, that they would get a job at, some big hedge fund, right? And that was the learning curve for them. But the markets don't work like that, man, And I hear it from people all the time. Like, we literally had a guy say, "Oh, I'm early a lot because I'm smarter than the market. So I see things before the market sees it. So I'm early." Okay, and how does that work out for you? You know what I mean? Like, who cares? Like, good for you. You're early. Are you making money? You know what I mean? Like, that's it. That's what this is. This isn't some kind of intellectual thing. This is, and it doesn't mean that making money is everything in the world. It's clearly not. But in this world, that's what it is. Okay, so you're losing money because you're smarter than everybody. Okay, good. Then go be a professor, man. You know what I mean? Do something that a smart person should do.
Did he get it?
Right? What's that?
Did he get it when you said that? Did he get it when you said
that? I just laughed.
Okay,
yes.
in your head you said it.
Things. Like I say, I like to observe it, and it all goes in my head, and it all comes out later in things that I write and things that I talk about. But one thing that my wife, I think, more than anybody, has instilled upon me is people are not asking for your help, Jason. So if you think that you're trying to help them, you're not. If they're not asking for it, then just there's nothing you can do, right? So, like, I'm not going to get in somebody's face and say, do you hear what you're saying and how ridiculous that is? Because that's just going to make them madder, and like, I don't need to get into it. So, I think my wife still thinks that I should do a much better job of that when it comes to her family, but when it comes to most people now, I don't. I'm not going to get into the argument. They'll learn. They'll learn when they're ready to learn.
Being right at the wrong time is not being right.
No.
It's being wrong.
Right.
It's a positive and a negative. But sometimes you can't be right perfectly either. That's the whole point about learning to love your losses.
That gets all down into having a process to trade, right? Because that way when you're wrong. Where is this theory? It's the most important thing about process. I don't care what your process is, but I'm getting in for this reason. Okay, where is that invalidated and I'm wrong? Therefore, I will get out. That, to me, that's what process is.
We'll return to the podcast shortly. First, a few words about our podcast sponsor, the Society of Technical Analysts, and their brilliant home study course. Now, there's many ways to learn technical analysis. You can read books about it, you can watch short YouTube videos about it, but there's nothing quite like learning it from the leading experts. And that's what this course is all about. It's been developed and brought to you by the Society of Technical Analysts, which are a non-profit organisation and have been going for over 50 years. And they run a brilliant diploma program, and that program has been devised by some of the best technical analysts in the world. Now, if you're serious about learning about price action methods and how they can help you become a better trader, or someone who uses price action methods to devise and build systems, then this course is what you want. If you want to learn about analysis, technical analysis that is, or price action methods from a 5-minute YouTube video put together by someone who's probably never done the job for a living, that's fine. Go knock yourself out. But if you're serious about learning about technical analysts, give this course a check out. You can go to the STA website, technicalanalysts.com, or you can go to our website, alpha-mind.net, and you can have a look at the course on there. And if you do it through us, there is a £100 sterling discount on the full cost of the course. Now, the course isn't cheap, but that's because it is a proper course. Anyway, I'll leave it up to you. Now, back to the podcast. I got a question for you, and I want to put this question to you as well, Mark, because you've worked with a lot of people that have had this issue, and I've worked with a lot of people who have this issue. And this came from a very good friend of mine who's a brilliant trader. He's been doing it about 30 years. He's always been a contrarian as well, a bit like yourself. And he has the same old problems keep coming up, which is the remorse he gets from accumulating a lot of negative carry whilst he's waiting for the trade to work out. Because these contrarian trades don't just go your way. And on the other hand, if you wait for them to go to your way, quite often they're gone and you miss them, or at least you miss a chunk of them. So I'm going to put that to you in a minute, Mark, but I'd love to hear your view on that, Jason.
I think definition of contrarian in this particular case is the important point, right? What does contrarian mean, right? And I think that for me, the way that I do it and in my belief system is that the worst thing you can do is be contrarian price, right? I do it via contrarian participation, right? And I think a lot of people that try to be contrarian price, and that is how you get killed, I believe. So
Right.
I forget what the exact question was, but you're early. You're early because you're being contrarian price. I believe that's why you're early.
Okay, but I mean, do you ever? I mean, do you ever have that? I mean, yeah, I presume. So in other words, you're saying that you put a stop on it, and if it doesn't work out, you're out on a stop, or are you using options and you just lose your premium? You never use options.
No, don't touch them. I'm a futures trader. I'm a directional futures trader. I am picky. For me personally, my process, I am picking market turns, right?
Right.
So if I buy something because I think that the market turned and it makes a new low, well, then I didn't get the turn, did I? Like by definition, if I'm trying to bet the turn and it makes a new low, then by definition, I didn't get the turn. So I stop out. So
Right.
I like that's what's nice about what I do is I don't have to question it. I know I'm trying to pick a turn. I know if a market makes a new low, it's not a turn, so I'm out, and then I can deal with my risk management, my sizing based on that. I'm in here. This is where I'm getting out. So I know how much I want to risk on a trade, and therefore I know how to size it. It all kind of just systematically works via the process that way. But that, like I was saying before, is the
Okay.
important thing. Where are you wrong? I don't care. You don't have to be a turn picker. You don't have to do what I do. Do what you do. But where are you wrong on this? Okay, because that's where you have to get out.
Do you know it's interesting because hearing you, there is a difference between styles. So you're very much what I would call a player. So you're picking your level. You know how much you want to risk, and that sets how much you put on the trade. I should imagine, or variations of the way
Yeah,
your playbook plays out. But there's another approach, which is the classic market making approach, which a lot of people from a market making background do, which is to constantly be contrarian because you're taking the liquidity or you're adding liquidity to the market actually, but you're doing it where you're getting people hitting your spreads, and you don't run it as far. You're just almost playing the mean reversion the whole time, and that's a slightly different game. That's a slightly different form of contrarian.
yeah.
But Mark, could I just put that to you? That kind of remorse around, the remorse that goes sometimes with this job, where either you miss something out, or you miss something, a great opportunity, or you're just caught holding something, and you believe you're right. And I know you get into the hope trade, but it just keeps going against you, and you're left with that feeling of remorse.
Yeah, I think a lot of the things that I've seen is where people just forget to trade. The concept that something arises and it's something that either a contrarian or even a normal type of signal, and they just don't trade because they overthink it, or they have spent too much time working out sizing because they've got a very weak process towards these things. So they end up just getting stuck. So as a consequence of that, there's a lot of people out there where the trade just doesn't happen. I mean, never mind losing, not even having the opportunity to make money becomes a problem. But even in the broken world, you can tell just looking at tickets. You get to the end of the day in any brokerage business, the biggest number of tickets you have left that are cancelled and unable orders because people have just not got into the trade in the first place. But even when they're in, and I think, this thing around size adjustment downward when risk starts to increase is something that's important, about having a regimen around having a stop in the market. So very much around the player version of the futures trader that Jason first described before you talked about the market maker version of traders. But if you're purely playing the market, then it's all about sizing. It's all about knowing your risk, being comfortable with the fact that you might be in it for a while, and your tolerance to staying into something is also part of that equation. Because if if you're hoping for a trade and you're 3 weeks in still hoping for the trade, you've missed God knows what. So I think having the right process, having the right radar, and of course the radar that we've talked about that Jason's plugged into is this, looking at things that's not a standard way of trading. This is not just looking at your point and figure or, technicals and saying, yeah, I'm bullish of the market. This is looking at the crowd of the market and kind of working out where they are to the point where there's now indication that going with them is a bad trade.
And having process is one thing, right? And it's an incredibly important thing. But nobody is forcing you to follow that process, right? So you have to. This is what's so hard for me every single day, right? I have a process. I follow it to a T as best I can, right? Does it mean that I don't screw it up sometimes? I screw it up sometimes, but I try very hard not to. It's very hard, even if you have the process, to stick to it. I can go through, God, so many trades that I missed. Okay. Look, we were looking to get long wheat for the last month or so. I missed it. Okay, my process didn't give me the exact entry that I needed. Okay, so I never got long. Well, the thing went from 50 to 650 in a week. That's a big move. I didn't chase it. I missed it. Okay, next. You know what I mean? Like it didn't fit my process how I needed to fit my process, so I let it go. I missed a trade this year, short British pound, right from the beat ass freaking high in the middle of July. Okay, and that would have been a humongous trade for me. Okay, and you know what? I missed it. Okay, so what? You know what I mean? What I didn't miss, the trades that I did take have worked for me, and I'm having a good year. Now I can sit there and be like, holy shit, the British pound, if I had caught that, I would have made this much more and that percentage much more on the assets that I manage and my payout. Oh my God, that's a shitload of money. You know what I mean? But what are you going to do? You're not, even if you have a perfect process, which it doesn't exist, but even if you did, you're not perfect, man. You know what I mean? No one's perfect. We make mistakes. I tend to err to the side of missing a trade than err to the side of putting on too many trades and losing money, right?
So what was more important there was your process, and your process didn't give you the short sterling signal.
Well, it kind of did, and I kind of messed it up. But the wheat one, it did not give me. Okay, I could go back and argue that the sterling trade actually did give me a thing, and I hesitated, and I justified the hesitation, and by the time it was time to put, I just missed it because I don't chase stuff, right? But you know what? It's like I always say. So you know what how I handle it? I call my mommy. She tells me she loves me, and I get on with it. Like that's all you can do, to sit here and cry, and it's just gonna screw your mind up and make you do other bad things, right?
Okay, so they were talking there perfectly about the remorse. The remorse issue is a big challenge for a lot of traders.
You got to get over it, man. You got to get over all these things, all these human emotions that you have that make you a human being.
You know what, Jason? I've got a book coming out in January. It's one that you haven't read yet because it's not out, and it's called Mastering the Mental Game of Trading. Quick plug, by the way, for the audience. If I was to summarize what the essence of the book is, it's about letting go. Because, myself and Mark, we've both coached many extraordinary traders. And it's almost like we find time and time again what makes the best traders. Is it they got the best signals? No. Is it they got the best processes? No. Do they have the best information and data? No. Routinely, though, they learn to let go.
And isn't that the truth about? Isn't that the truth? Forget about trading. Isn't that the truth about life?
100%.
Let it go, man. Let it go.
100%. And by letting go,
I
though,
mean, if you're gonna go see a shrink,
Yeah.
that's what a shrink is gonna tell you every freaking day. Let
but,
it go.
but
Your
this is the
mommy was
point.
mean to you when you were growing
Yeah.
up. Let it go.
This is the point, though. It's the hardest thing to do.
Yes.
That's why the very best, only the very best can do it, and it's because they can do it. And we've noticed, there's this thing where we say they're good to themselves, they're compassionate to themselves, they give themselves a break. So I missed it. There'll be another one along. Which is another mantra.
But look, even within that, I say that. Oh, so I missed it. There'll be another one. I didn't lose any money. I say that, and I can sit here and say that all day. Okay.
Yeah.
But was I kicking myself in the ass for 2 months about missing that British pound trade? You better believe I was. Okay.
You're human. You're only human, right?
I'm only human, but I will not let it affect my trading.
Yeah, you let go.
You know what I mean? I can go out and scream and yell and whatever, beat my kids or do whatever I do, but I will not let it affect my trading. And so, yeah, that's what's so, and you say it's the hardest thing to do. It is the hardest thing to do. And you know what? That's why people that are successful doing it make so much money.
Yeah.
I mean, a hedge fund manager does not add that much to society that he should make $1 billion a year. Okay. But he does something, if he really makes money over time on a risk adjusted basis, that is so very difficult to do.
Yeah.
That's why he gets paid that. I mean, that's what getting paid a lot of money is, right? If you can do something that no one else can do, you can get paid a lot of money, right? And if you can only do something that 1 million people could do, you don't get paid a lot of money, right? So the idea that it's so very hard is why it is so very profitable to be able to do it.
And I think that's what attracts a lot of people, because it's a game.
The money attracts people.
I think the game attracts a lot of people. That's the whole point. They want to be right. We go back to the very beginning.
Right.
They've got this. It's a chance for them to prove their brilliance.
Yes.
It
is. And they prove that.
They prove that they're not brilliant, most of them. But you know what? They would have been right.
They still don't admit it. Well, I wasn't wrong. The market was wrong. The market's ridiculous. The Fed is ridiculous. The Fed is manipulating the market. The ODT, whatever the hell they call those options, that's changed the game. The market's manipulated now. You hear these things all the time. Okay, maybe those things are all true, but the bottom line is you got to make money, man. Like, you know what I mean? Like, if those things are true and you can recognize them, then play that, right? If that's what you believe, right? So, the intellectualizing of being wrong, it's something that I listen to now all the time and focus on all the time. And it's an amazing, amazing thing.
Yeah, some of this conversation, Steve, sort of reflects back to Adam Burkett's conversation about that it's okay to not know. Not knowing also is part of this, and be okay with not knowing. That there are so many people that that clamber for the acknowledgement that something is worth doing and spend so much time on it, right? But I think that actually, Jason, the process you described, where if you just look for something that's the worst possible scenario as a trade, that's easier to do than looking for the best trade.
Yeah.
It's just the way we figure out things, right? It's just easier to our mentality.
I mean, there's a guy that I follow pretty extensively, okay? Because I consider him to be the single greatest fade in the world, I would argue, okay? And there's a number of reasons that makes him the greatest fade in the world. On a cycle, he did go to an Ivy League school, so he considers himself to be a very smart guy, and he has said that out loud. I'm not a dumb guy. I'm a smart guy, right? He loves to analyze the macro stuff as if like he's seeing something that the whole world can't see. Okay. And more important than any of it, he's wrong all the time, like on levels that I've never seen in my life, and yet never acknowledges that, okay? And never changes the way that he approaches things. That's what makes him, to me, the best fade, right? Is he will refuse to. He did a thing where, and I could come up with so many of these that would freak you out. But very recently, before Toll Brothers earnings came out, he said short Toll Brothers. Okay, fine, fair enough. And in the 10 days since Toll Brothers earnings came out, the stock is up 20% in 10 days. Okay, fine, losing trade, whatever. His answer yesterday to that was Toll Brothers is an accident waiting to happen. That's his answer to you just shorted the stock that went up 20% in 10 days. What do you think? His answer is it's an accident waiting to happen. According to who? It sounds to me like it's an accident that just happened. Okay, he lost 20% in 10 days. It's not waiting to happen. It just did happen, right? But like he can't give it up. It's not that he was wrong. It's that the market's wrong. Only he can see that Toll Brothers is an accident waiting to happen. Only he understands the fundamentals of the U.S. housing market. Only he understands the balance sheet of Toll Brothers. Like, it's so fucking ridiculous, okay? And that's why this particular person, it continues to just be an amazing fade. I mean, I can't even tell you, but I just got to give you one more. The guy came out. I watch Macy's stock because somebody that I know owns a lot of Macy's stock and was losing a lot of money on that this year. So I kind of watch it. So if I could see anything that maybe I can help him out with, I don't know. And this guy never had spoken about Macy's in his life. And Macy's came out with earnings about a month ago, and the stock, and they were better than expected. And the stock went up a little bit that next day and kind of came way off its highs by the close. And this guy was like, "Oh, this is a stock reacting poorly to these earnings. I think Macy's is a short here." Of all the stocks in the world, this guy never spoke about Macy's ever. Okay, this is a stock that had gone from like whatever 50 to 12 or something. Now he thinks it's a short, okay? Well, Macy's went up 70% after he said that and then got bought out, okay? Like a premium, Like you couldn't come up with that if you wanted to. It's so incredibly amazing to me. So like I say, these are the people that I'm looking for, not just the fact that they're wrong a lot. Okay, yes, but why are they wrong? Because their behavior, their biases, right, are so obvious to see, and they refuse to change them because they want to be right and they cannot admit they are wrong. Fade them all day long.
Yeah, it's interesting that so just to add, if I look back over 37 years in the business, you get a lot of people commentating your way with research and analysis, and their view is aired and their positional preference is aired. But I don't recall any one of those people actually becoming a trader, and then swapping over to the other side and taking their views and actually making any money about it.
I mean, this guy in particular started as a trader, okay, failed as a trader, and became a commentator. Even more reason why he's a great fade, right? But people, it fascinates me because people are looking for that. People want somebody to tell them what to do, right? And look, I have a service. I don't tell people what to do, what to trade. I try to help them understand what it takes to get a good mindset about trading, to understand what they may be doing mistake wise, because I've made the same mistakes and I've seen a million people make the same mistakes. So hopefully I can help them to find that. But I'm not here to say buy SPOOs here, buy bonds here. I have my certain ideas of what I think, but I'm not here to say that to them because but I find that's what people a lot of times want. They want to just be told. It doesn't even matter who tells them. They just need somebody to tell them what to do, and it ain't going to work. It ain't going to work. So, you have to have the balls to to figure it out yourself. It's just like anything else, except maybe harder. This is very hard to do. So no one's going to hand it to you on a plate, but it shouldn't be that hard, truthfully, because there are rules in trading that have been passed down. I haven't invented any of these rules. You know, they've been passed down. Read the Market Wizard series of books, right? Cut losses quick, ride gainers. I mean, there's some very basic rules. Don't fight the tape. You know, these are very basic rules that we all know, and they're all there, right? Um, that's a rule book. Follow the rule book, man, and your chances of success are going to increase.
What I was getting excited about a minute ago was I wanted to go back to someone who, when you talked about, people who are constantly fading, there's a guy, and in 2019, he was knocked off the top of the Extel poll for top global strategist, okay, after 15 straight years coming out on top. He's a well-known perma-bear, serious perma-bear. He has been wrong for 15 years in a row, perhaps with the exception of 2008, okay? And yet he maintained his position as top analyst for those entire 15 years. And I'm reading his article about him from June 2019 when he was dethroned from the very top of that poll, when he said that the loss of his top spot, right, is the contrarian signal that the record-breaking bull market is near an end. The S&P was at 2,900 at the time. I mean, this is what I don't understand about this industry sometimes. If you've been a perma bear for probably what's nearly the last 20 years, how do you keep getting rated as the top strategist in the world year after year? What does that say about this business?
What does it say about human beings? All this business is a function of human beings. Well, what does it say about human beings? You tell me. It's ridiculous. And that's why I fade them. Look, that's why fading them is profitable. It's exactly it. That's it.
So people prefer a story to reality.
That's correct. That's correct. They're getting out of it what they want to get out of it. I mean, listen, I don't want to offend people, although I'm about to. They want to be told a story rather than reality. Okay? Okay, I'm going to offend people here. I'm an atheist. You want to talk about a group that wants to be told a story instead of reality? We got the greatest story in the world, man. There it is, right? There it is. It's the greatest story that mankind has ever told, right? Does it make sense? I mean, don't make sense to me.
People die for it.
And kill for it.
Yeah.
Right? Is it reality? Look, again, I don't want to offend people. To some people, it is reality. In my view, it is not reality. But it's a great freaking story, man.
Yeah.
It's a great story. And it's been passed down for 2,000 years and
more.
And people love it, right?
Yeah.
So it's just it's human nature. I've come to accept that that's human nature. I have come to try and learn about why human nature has developed that way. It seems like it's kind of a survivor thing. We can't survive alone as a society, so we have to survive as a group, right? And so therefore things get developed to make our group one and to make our group unified, right? Because that is how we survive as a society. I think that's what it is. I'm no expert in it, but from the stuff that I've been reading recently in the last year or so, I believe that's kind of what it really comes down to. And again, this is why trading can be so valuable for somebody like me. Because if you do believe that all of this is bullshit, you can't prove it. I can't go into a church and say all your people are freaking out of your freaking minds, okay? Because they'll kick me out, right? Um, but I can trade the markets and say when all you people are doing the same exact thing and I take the other side, you're all going to tell me I'm crazy, but it doesn't matter because if I make money, then it's right. So this is why the markets are kind of very important to me, because it's a place where I can actually thrive by having that thought process rather than be, vilified.
Did you have anyone who inspired you down this path, or did you find it yourself?
It was a combination of a lot of things, I think the very first thing that hit me with this was my very first job in the market. I worked in a retail brokerage place in Hong Kong for about 6 months. And it was a bunch of kids like me. We're 22, 23 years old, and we got a few clients, and we're trying to trade the markets. And there was this one guy sitting in the back, Isaac Sofair, who was like in his 40s. And he would just wait. And when we all started to do the same thing, he would fade it. And it didn't take long for me to realize, like, he's completely right. What are the chances of a bunch of 22-year-old kids, chasing momentum or punting the market? What are the chances of that working over time? It's got to approach zero. Okay. So clearly fading that, the chance of success have got to approach 100 over time. Right. I think that was the first time that really kind of hit me. But, like anybody, my first reaction was, oh, Isaac, he's trying to fade us all. We're going to screw him. You know what I mean? Because that's what your ego does. But eventually I was like, he's 100% right. Like as you get experience, like what, you're going to put a bunch of 22-year-old kids in a room and they're all just going to start making money in the markets. You don't have to be in the market long to understand that is not going to work over time. Right. So I think that was kind of how it first started. And then it just compounded on itself by me watching myself for the first 10 years. Right. And seeing how I lost money and being like, okay, people make jokes all the time. Oh, if I had just done the opposite of everything I did, I'd be making money. Well, it's not that much of a joke, right? And rather than do the opposite of what you're doing, because that's impossible to do, because by definition, you do something, so you can't be doing the opposite of that, right? Just do the opposite of what they're all doing. Like that's all. That's really all I do, man. People want it to be something else, and it's really not. That's all I'm doing. And the more people that are doing it, here's one person that I know is a fade. Doesn't mean he can't have winning trades. Clearly, by definition, luck alone would get you there. But if I know 50 people doing it at the same time, all of whom I have witnessed to be bad traders, right? Then I think my odds increase. And that's what I'm waiting for. I'm waiting for that. I'm waiting for all 50 of them to be doing it. And then I'm waiting for the market to confirm it too. And then the odds just go up. So
hence the crowded market report, which is, of course, it's the vehicle that you're part of, isn't it?
Call it crowded market report. I'm thinking of changing the name to Trade, Don't Fade. No, Fade, Don't Trade. Don't trade, fade. I'm thinking of changing the name to Don't Trade, Fade.
I was going to ask you your advice for people going into next year, but I think you've just given it.
Trade, fade. So let's think about what people are saying for next year, right? I still think people want to be overweight bonds relative to stocks. And so therefore that's probably not going to work. It didn't work this year, right? And while bonds didn't get, they were getting killed for a while. They've come back. They're flattish or whatever on the year. But think about the opportunity cost you lost by being in bonds relative to stocks this year. Are you kidding me? Even S&P, forget about NASDAQ for a minute, where you just lost 5 years of returns by doing that. But even S&P, what's the S&P up 20-something%? Bonds are flat. You lost a 20% year this year by being in bonds rather than stocks. I think that is still what people believe for next year. So I still don't think that works. Whether that works because bonds go down, I don't know. But the relative trade to me is still going to be stocks over bonds until that. And I can't say a year because in 4 or 5 months that could all change and people could go the other way, right? And they could chase the stocks and get out of the bonds, and then my opinion on that will change, right? But for now, I still think that's that's the case. People are just way too overweight bonds relative to stocks. So I think stocks outperform. And look, that means that they could both go down. Okay. But I think stocks will outperform bonds until they give up on that idea. And it's as simple as, somebody put on our Discord yesterday an interview that some woman did on CNBC. And it starts with just her introduction of who she is. She was like the market strategist for the, private account management division of her investment bank or whatever. You know what I mean? And I think, those are all very impressive things, but has she ever managed money in her freaking life? No, right? And so therefore, does she really understand risk reward and all that? No. And she came out and she gave her view, which was exactly that, and she gave up. She had been bearish all year. And they said that in the beginning. And they said, well, are you still bearish? She goes, I am not bearish. I'm cautious. Okay. So in other words, you've been bearish, sweetheart, and you just can't admit it, okay, because you've been so freaking wrong. Now it's become cautious. But yeah, she's still overweighting bonds, in particular long duration bonds, because I'm just like, oh my God, this lady is giving me my entire year next year in one 5-minute interview, right? So I think that's the idea. I can come here and make these incredibly macro arguments about how I think that at some point next year, 30-year bonds are going to be the biggest sale in the history of mankind, which is what I believe. Okay. But does that mean I'll ever short 30-year bonds? No, doesn't mean that until they tell me that it's time to short based on positioning and based on market action and all that. I'll never be short them, but I understand it makes for a much more interesting interview if I sit here and make these arguments about why 30-year bonds are going to be the biggest sale in the history of mankind, and the Fed is, whatever they're doing, and I can make the argument why it's so stupid and how that's going to come back in the end to crush everyone. That's all very exciting, but doesn't to me that's not how you make money. You make money by finding fades. So
yeah, and I guess if I was just listening to this and I'm picking up what do I need to do? I need to start listening and paying attention to other people's views. Because of course you having this sense of this curiosity of wanting to listen to that interview, of wanting to listen to these people that are putting out these forecasts. You've got a hunger for that, because you kind of want to figure out, well, what is the opinion out there that's going to be loaded into the market? So to be able to fade something, you kind of need to know what you're going to be fading. So you got to be tuning into these channels.
you need to know consensus if you want to
Yeah.
fade, and it's painful.
Yeah. It's hard work.
Listening to these people is painful because they are so non-market savvy. People say to me all the time, how do you listen to this guy all the time? He's a moron. And I'm like, that's precisely why I listen to him all the time. Okay. Well, how do you listen to the Goldman Sachs research guys all the time? Because they're geniuses. Like, to me, there's no difference. Right. So, it's a little bit painful, but I think the good news is now that we have this Discord page and I've got a few hundred people on there, we're all watching out for each other when it comes to that. Like, I only caught that interview on CNBC yesterday, quite frankly, because somebody posted it on our Discord, and so I watched it. So now there's in a way less of that I have to do because we got a whole bunch of people that are doing it, right? And we're kind of helping each other and watching out for that type of stuff. But yeah, it can be painful listening to these guys, but it's profitable. So,
and it's necessary.
Like I say, what are you trying to do here?
It's necessary, right? You kind of just have to do it.
That is my research. Yep. You know what I mean? That's my research. My research is not going through government reports and seeing, what part of the ism was bullish and what part of the ism was, like, that's not my research. My research is trying to find the people that I think show behavioral biases towards being wrong in the market, trying to find as many of them as I can. And the more that they agree with each other, the more conviction I can have towards fading them. That's my research. Crazy as it is, that's what it is.
I think this is brilliant. This is great. This has been great listening for traders again. This is why we love having you on. You've got so much. You've also got so much passion for this. You really.
I better.
Yeah, I can see when you talk. It's like it's oozing out of you every time.
I mean, this is what I do, man. Every day, every night, every weekend. You know what I mean? Like I better have passion for it because this is pretty much all I do. So if I lose the passion, then I'm going to have to move on, but as long as it's working, then, and again, it's not just the market that I have passion for. It's the whole thought process. It's the whole belief system, that I have passion for. And it plays out in the market. Like I was saying, I can't go to a party and argue with 100 people. If they all agree and I disagree, I lose, right? But in the market, I can win by doing that. So that's really what I have a passion for.
There was something you put on Twitter a couple of days ago, and it was a little clip, but I never quite caught it. What was that?
Which one?
It was two guys talking, and you got a mention. And
it was great. That was great.
What was that? Because I didn't know the story behind that one.
So when I talk about the guy who I think is the biggest fade in the world, that's him.
Oh, really? Okay.
So, and he does a show on YouTube 4 days a week, I think, that I watch, and I try and I try and push him, because I want him to be making these mistakes, right? And I want to hear him, so I'm trying to push him. And so at one point, so you have a comment section as they're doing the YouTube, and I'm on there typing shit like, you know what I mean? You're a fucking fade, you're an ass. I'm just trying to push him because, that's when, look, this is war, okay? And it might not be a very nice thing to do, but this is what I do, okay? So at one point he said, and it's so funny that it was caught on tape because it just shows you all the people on my Discord have bought so into this. They watched, we're probably the biggest watchers of his stuff, okay? And one of them caught the whole thing on tape, okay, and sent it to us the other day. So I had to put it on Twitter because it was so funny because it was from I think May or something of this year. And he got on there and he was like, and it's just so funny how he does. This is what I'm saying. He's so pompous about everything he says, even though he's wrong consistently, right? And he said something. Oh, we got some real beauties on here. This guy, our boy, our buddy. I think he called me my buddy or our main man. Here's our main man, Jason Shapiro, on here saying they said something like, folks, we're going to get him right and we're going to get him wrong. So I made a comment and I go, I'm still waiting for you to get one right. You know what I mean? So he repeated that. He goes, here's our main man, Jason Shapiro, said, I'm still waiting for you to get one right. And he said he was answering my comment of we're going to get some right and some wrong. He goes, but, and then he goes on to say, but it's okay, Dan, because you do help because you're the biggest fade I've ever known in my life or something, or you're the biggest fade on the planet. And he read that on there, right? Saying that I was like a moron for saying those type of things, right? But now as time has gone on, I mean, you can go back and I've wanted to do it, but I just don't have the time. But you can go back and look at these guys' calls. And you're talking about a guy who basically spent the entire first half of this year shorting NVIDIA and the NASDAQ, right? Gave up on that in the summer. And since then, was shorting Bitcoin, was shorting, like I say, Toll Brothers, was shorting Macy's. He had a stock that he loved because he loves, is typical of a losing trader. He loves to sell the strength and buy the weakness. So it was one of these stocks. I forget which one it was, but he was buying it, and I think it was Snap, right? He was buying it and losing money, and buying it and losing money, and buying it and losing money, and then he gave up. And it's all right there on his shows. That's the beautiful thing about it. I ain't making this shit up. It's all right there, right? And then he gave up on the Snap, and Snap went up 50% in 6 weeks. I ain't making this shit up, man. This is not personal. I don't know the guy. You know what I mean? I'm personally against the guy, but
he should invest his money though in the Jason Shapiro ETF as the perfect hedge, right?
I mean, we should start an ETF just fading him too. Someone do a fade Kramer ETF. This guy's much better. But yeah, so that's what that video was. So I just thought that one of the guys had actually taped it and saved it and put it on our Discord the other day to make us laugh. And so I put it on Twitter because I just think it's so funny. It's so funny how he is implying that I am a moron because I am saying he's the biggest fade. But the data proves that what I'm saying is actually, and it's not about what I'm saying, but the data proves that that is correct. He is the biggest fade, right? And yet he wants to say that I'm a moron for saying it, right? It proves the point to me, right? It proves the point of why you're the biggest fade. If you weren't a fade and you wanted to change it, you'd get on there and you go, hey, this guy, Jason Shapiro, told me I was the biggest fade. And you know what? He was completely right. And because of that, I have re-examined how I approach the market. And I'm going to approach it in a new way now. That would make you not a fade to me, right? But the fact that, you feel the need to make fun of people that are calling you a fade just proves the point that much more.
Don't trade fade.
So yeah, that's why I put that on Twitter. I thought it was funny.
Brilliant. Mark, I think we're going to hand back to you now. So just before we go, actually, can you just remind people again about Crowded Market Report, how they can find about you, how they can follow you, and how they can make sure it's a real Jason Shapiro and not all these crazy fake accounts that are appearing everywhere?
So Crowded Market Report was started a couple of years ago after I was in Jack Schwager's book.
Yeah.
A lot of people contacted me and asked me if I could sort of teach them or teach them what I know or help them. And because I guess they liked the book and I didn't know what to do because I can't help all those people at the same time. I do have a business and I do have a family. And one of them said to me, well, if there's a lot of people that want to do that, then why don't we centralize it and start a website and they can all kind of join there and we can do it there. So that's what we did. And it was just kind of started on a whim and nothing to lose, And what we did was I distribute this newsletter every week that, like I say, it's what I've done every week for the last, 25 years for myself. Here's the markets that I'm looking at. Here's why. Here's what's going to trigger a trade, so that to help me keep my discipline, essentially, right? And then I write down a bunch of sort of macro thoughts sometimes based on sort of a contrarian look at what the macro could be. I do those more, like I say, so I can go back and see how wrong I was. But, and that's kind of what it is. So we distributed that newsletter. And then the guy who started this, started a Discord page for it, which I always say I didn't even know what Discord was at the time, which is a fact. I did not know what Discord was at the time. But there's a Discord page for it. And so you get this newsletter and you get this Discord page. And we made the price ridiculously cheap. It's like $100 a month, right? Which gets this guy paid and also, keeps him motivated to keep the thing up to professionalism. And it's kind of grown from there because I thought we'd get maybe 30 people, 50 people, and we'd meet some people, we'd have some fun, we'd talk markets and, I hope maybe I could help some people, maybe they could help me, but it's kind of turned into this big thing because we started doing Twitter, which I'd never bid on. I started doing YouTube videos every week, which I think I was actually started doing before I even started the Crowded Market Report. But those YouTube videos then have sort of introduced people to what I do, and then they get on, they've joined, and we've had a lot of people join, and which has made it even better because we've had people join that do all kinds of things, and some people who are very, very smart and who have taught me a lot of things and have shown me a lot of things, and a lot of people that do some programming stuff that I can't do. And it's always good to hear other voices. And these all people have all kind of started to help each other outside of me, which I just think is incredible. It's become this incredible community. It's given me a whole new life, quite frankly, from my selfish point of view. And so that's kind of what Crowded Market Report is. And if you don't want to get involved on that level, that's fine. I'm on Twitter, and yes, I don't know how to stop these fake Twitter accounts. I think my partner tried. He tries, but people send us messages all the time, like, Every time I comment on something you say, Jason, I end up getting 20 fake Twitter accounts following me with your name on it. And they send them to us. And I think my partner goes and lets Twitter know, but they don't seem to be doing very much about it, quite frankly. So there's nothing I can really do about that. And I apologize for that. If you join us on Twitter, it should be crowded _MKT _RPT. And of course, people make it like crowded _MKTT. They make it close, right? Enough. But I think we have like 30,000 followers. So if it's somebody that has like 1,000 followers or a few hundred followers, I guess that's one way to check. That's not us, right? We have somewhere around 30,000 followers. So, and you'll see. I'm not on there selling anything. You know what I mean? I'm not on there saying, hey, you'll see the posts that I make are usually about either commitment to traders data or general psychology on the markets. There's no, hey, join us at this special, secret Twitter thing that you have to pay to join. If that's what's coming through, then that's one of the fake accounts. Okay. I guess that's the only way to really see that. And then the other places on YouTube, I try to do a YouTube video every week. It's become a little bit, I think, monotonous for some because there's only so many ways that you can say, follow your process, be disciplined. You know what I mean? Don't fight the tape, right? So we started to mix it up a little bit and try to do some interviews with people. And I've tried to find people that are not sort of the people that are getting interviewed all over the place, like Jason Shapiro. I wouldn't interview Jason Shapiro because Jason Shapiro is getting interviewed all over the place. But like we did an Annie Duke interview that I thought was extremely interesting. And by the way, Howard Marks came out a month later and did an Annie Duke interview because all these billionaires are just trying to copy trade Jason Shapiro, clearly. But, so we're trying to get some interesting people with different viewpoints. I am really trying to, even if it is people that get interviewed once in a while, I'm trying to interview people that do something different than I do. You know what I mean? Like we had a day trader on there, which is something that I don't do, right? We had a trend trader on there, which is something that I don't do, right? Trying to get a different viewpoint because my message is always, this is what I do. That doesn't necessarily mean this is what you have to do, right? But there are lessons in what I do that you can apply, hopefully, to what it is you do, right? That's really the main message I'm trying to get through to people, right? And I know people, if they get my newsletter and they're on the Discord, that they can see the trades that I'm making. And if they feel like copy trading me, they can do that. But I really try to explain in a number of different ways why I think that's a bad idea, quite frankly. And there are many reasons why that's a bad idea. And I tell these guys, why would you want to, oh, well, you have this great track record. So if I just copy you, I can get that track record. I'm like, you could be better than me, dude. There's limitations to what I do. Okay. You can be better than me. You can take what I am doing and you can apply it to what you have learned and what you are doing and make it all better than me. So don't limit yourself. You know what I mean? Not to mention the fact that I have a specific job to do for my clients, right? Which is this negative correlation thing. You don't have that limitation, right? I am almost, I'm not going to say limiting my upside, but there's a constraint on my returns in that, yes, I want to maximize my risk adjusted returns, but within the constraint of being negatively correlated to everything else, right? You don't have to have that constraint. You have no reason to be negatively correlated to everything else, right? You just want to make as much money as you can. So you can take kind of what I do and improve upon what you do with it is what I try to tell people to do. And I think a lot of people have done that. I've gotten some feedback from some of the people on there where they're just crushing it. And, we laugh this year too, because I think the hedge fund world, the professional money manager world where all the geniuses are, have had a tough freaking year this year, right? And we have crushed it. I've got a bunch of retail traders on there, man, that are trading whatever, 20 grand, 100 grand, a couple guys on there, maybe, that are managing a couple $1 million of their own money. We have some professional guys and all that, and they've crushed it. They've crushed it. And that ultimately, at the bottom line of it is what I wanted to do. I want to show these guys you can be better than all these freaking guys, man, because these guys are nothing. They don't know what they're doing, right? And you can crush them all. And that's kind of what we did this year, I'm happy to say. I don't know if that means we're going to do it next year, but certainly this year it worked. So that's made me kind of really happy.
What a great service you're doing for those out there that are trying to figure it out, and there's a lot of folk out there that are perhaps going down the wrong avenue about it, because
The wrong avenue.
they're in the game to be right rather than being in the game to make money, and by that subtle shift of focus,
they're going down the wrong avenue, and
dead end.
I don't know I don't know what my future brings, but I do have this fantasy that I'm going to my youngest one finishes college in 2.5 years, and I do have this fantasy that I'm going to retire and spend the rest of my life doing what Houdini did in the last part of his life, right? Which is just kind of go out and expose as many frauds as he possibly can. I do have this fantasy that I'm going to do that, and I'm just going to go out there and expose all this entire Wall Street fraud for what it is. I don't know if I'm going to do it. I don't know if I'm going to have the strength to do it. I don't know if I'm going to have the energy to do it, but I like to think that that is where the last part of my life is going to go. I would love to expose what a fraud the entire thing is. That they're selling people on, crap that is in the market already. They never once mentioned that the market is a discounting mechanism, right? And anything that these people on TV are saying is clearly discounted in, right? And so that gives you no edge. And I just want to, it's like my life dream. I just want to expose that fraud to the world. They might kill me, but hey.
Well, I'm sure we're going to be, I was going to say, I'm sure we're going to be keeping in touch with your journey and get you back just to see what's next in this. But, I think it's been fabulous getting you on and for you to be so transparent and sharing these things and calling the stuff out, right? Because we get it as well. Like I say, there's lots of people heading down the wrong avenue that need to kind of stop, retrace their steps, and kind of figure out, okay, what's my purpose here?
But they're being led down the wrong avenue because, look, if I wanted to learn how to be an electrician, okay, I'd be starting from scratch, right? So what would I do? I would go to an electrician and I would say, could you teach me how to be an electrician? Okay. So it's the same thing. If you're trying to learn about the markets, what are you going to do? Well, you're going to turn on to CNBC and you're going to listen to these people because they're experts, right? I have had people watch or listen on the radio to, again, my favorite fade as an example. And I'll sit there and I'll just be going, I'm like, this guy has no idea what he's talking about. And the person sitting with me be like, he sounds like he knows what he's talking about to me. And he does sound like he knows what he's talking about. He's talking about interest rates. He's talking about the Fed. He's talking about, all these things. And to someone who doesn't know what the markets are, that all sounds very impressive. And it sounds like you know what you're talking about. But the first thing you have to know what you're talking about is the market is a discounting mechanism. Electrician is not a discounting mechanism. There's rules to it, right? Here's how you hook up a wire. You know what I mean? Like, there's no contrarian there, right? You want to be a contrarian as an electrician? Okay, don't turn off the electricity before you hook up a wire. And not only are you contrarian, you're dead, okay? But there's no discounting mechanism, right, to being an electrician. There's a discounting mechanism to the market, and people don't get that, right? They think that, hey, if I can spot a good company, then I'll buy it because that means it's going to go up. Well, is that really what it means? I'm not so sure that's what it means, right? And people don't tell that because that doesn't sell, right? And it doesn't bring people back either, right? If everyone's attitude is anything these guys on TV can say is already discounted into market, well, then their attitude would be, then why the hell should I even watch it? So they're clearly not going to let you know that. So that's why they're being led down the wrong path, I believe. They want it, just like anything else, they want it to make sense. They want it to be logical, right? We need that. We need things to make sense, right? And the market does not make sense. So they're being led down the wrong path because of that, which I think is normal.
I was just saying, brilliant. We could listen to you all day and all evening, although to be honest, it's late evening here.
Yeah, unfortunately, I can spout all day and all evening too. So.
It's been great having you on again. You've become the first person who's done 3 podcasts with us now, and I'm sure we'll do another one in 24 because we get so many great so much great follow-up from you when you were on. You know, people saying,
well, I'm glad to hear that. I'm really, as you can see,
yeah,
I'm trying to pass along a message.
yeah.
I know it sounds crazy, you know what I mean? I know it sounds rebellious, but I'm telling you with every freaking ounce of my being, 37 years or something of doing this or whatever the number is.
It's not rebellious,
35
though.
years.
It's not rebellious.
Every ounce of my being, I know this to be true.
It feels rebellious, but that's how you make money. You know, fade was it? Don't trade, fade.
Yes.
There it is. Okay, well, we're going to leave you.
All right,
you're our final one of 23. Have a great
Happy New Year.
Atheist Christmas and a brilliant New Year.
And you. Thanks for having me.
Take care.
Look after yourself.
Great talking to you guys.
Thank you for listening to the AlphaMind Podcast today. We also want to extend a thank you to our podcast sponsor, the Society of Technical Analysts. Do check out their brilliant home study course, and you can see more about that at our website, alpha-mind.net. And of course, if you're keen to know more about how AlphaMind can help you, please do also look up further details of our services on our website, or reach out to us at info@alpha-mind.net. That just leaves us to say thank you, and we wish you the best of luck in the weeks ahead.